Hey guys, Akil Stokes here with Tier1Trading.com and welcome to another weekend Trading Edge video where I take you around the markets and show you some of the top ideas that are on my radar for the week ahead. Running a little bit late this weekend, so we're going to kind of get right into things, right? We're going to start here on the Aussie-Canada 4-hour chart. And what we're looking at here is a potential bearish bat pattern. If you guys remember from a few weeks ago, we had our nice descending triangle here that broke out well to the downside. Now we're starting to see a little bit of a consolidation, a little bit of retracement, and we know that we tend to see these harmonic patterns, these advanced pattern formations form within these type of market conditions. So if I take a Fibonacci extension from my swing high to my swing low, that's going to be this move right here, the last high of the descending triangle all the way to the low of the extension. That is going to be my X to A leg. My B leg forms with a retracement up to the 50% level. I then have a C leg, which is a failed extension down. And if price action pushes up to our 886 Fibonacci retracement here, that is going to be our completion point for a bearish bat pattern. So we're looking at a zone that starts at our 886, which is about 92.87s to start our pattern, and a completion zone right at the high of our X leg, which is about 93.10s. We've got a nice 93 even handle in there as well. Bearish or potential bearish bat pattern here on the Aussie-Canada 4-hour time frame. Next up, speaking of descending triangles, is going to be Pound Canada. Again, this is a pair we looked at a few weeks ago. If you guys are new, just make sure you're paying attention to all of these videos and watching them on a regular basis. Many of the newer ideas that we have actually stem off the result of older ideas. So it's really cool to see how one thing forms into another. If you remember here, we had a similar situation, a descending triangle. This one failed, right? Well, at least this one on this time frame failed right here. We did not get the break to the downside, and we actually pushed to the upside here, right? We had a lot of pound news over the last few weeks. We are now forming a head and shoulders pattern. This is a pretty special one as well. So the head and shoulders pattern looks like this. Let me just grab my tool here. We're going to see our move up. Our extension is going to form our left shoulder. Our retracement is going to form the beginning of our neckline. The bigger extension up is going to be our head. The secondary test is going to confirm our neckline. And what we're looking at here is currently the completion of the right shoulder, which ideally should be somewhat symmetrical to the left shoulder, meaning in that same area. Now, what makes this one a little bit special, let me just finish this line here, is that you can see that on our left neckline, we actually have a break and close below our right, on our right neckline, we have a break and close below our left neckline, so a violation of structure. And this is a situation that one of the traders that I've worked with closely for years, Cody, we call it the Cody special because this is how he trades head and shoulders. There are 3 ways to trade the head and shoulders, right? There is, I guess I'll simplify it. There are 2 main ways. One is after the pattern is completed, which means a violation of our neckline, this green line here. 2 is aggressively at the right shoulder, kind of like the same way you would approach an aggressive breakout technique where you're anticipating that the breakout is going to happen and you're trying to get involved in advance of that. Now, the danger of getting in right here is that we have no confirmation that this head and shoulders will complete, right? We don't have that confirmation until we break here. So it's a little bit of a risky move. So what Cody does is he says this. He says, hey, I'm only going to be aggressive at this right shoulder when the left neckline violates our previous level of structure right here. So this would be one of those situations where due to that violation, this could be a potential aggressive entry into that head and shoulders instead of waiting for it to confirm the neckline. And in this case, in particular, right, there's not a lot of room to the downside that I see. Our next level of structure is right under here. So this would be the only way that would actually make it worthwhile. Now, to revisit another idea that we had weeks ago, if we go out to the daily, you'll remember that this smaller descending triangle was actually inside a bigger one on the higher time frame. So if you're a daily trader, if you're anticipating this daily breakout, perhaps this head and shoulders pattern, the right shoulder, right, the aggressive right shoulder can be an aggressive way to get involved in this bigger descending triangle move, anticipating that breakout to the downside, right? Pretty cool how things work together. Next up, we're going to head over to New Zealand yen. We're going to start here on the daily chart. New Zealand yen is very similar to the situation that we had on both the pound yen and euro yen over the past few weeks, meaning we had a breakout of this previous level of consolidation and we anticipated a move to the upside. Now, those moves worked really, really good in the pound yen and the euro yen. Does that mean that it's going to work here with the New Zealand yen? Not necessarily, right? I know a lot of traders look for correlations. Well, these are all 3 yen crosses, and if 2 of them do the same thing, then the third one has to do the same thing. And remember, that's not necessarily the case. Yes, they are yen crosses, all 3 of them, and the movement on those crosses is going to be somewhat due to, really, bullishness or bearishness, strength or weakness in the yen overall. But also remember that there's 2 sides to a pair. There's not just one currency, there's another currency as well. So what's happening with New Zealand as well is going to have an effect on this pair. So what we've had here is we did have a break and close below, or above, excuse me. We are anticipating a move higher. You can see all the fibs that we drew out from this week in the live room. And we're starting to get a little bit of a hold and a retracement. So if you are someone that's anticipating that bullish breakout, right, our retracement should come, or I should say the place that you're looking for longs should come right here as your first level. And then as long as we stay above this level, you should be good, right? So if you're anticipating 2 areas to look to trade the market, one is going to be in this area, this kill zone between 84.5, 84.50s, and basically 84 even. And then the extreme of your zone is going to be right here about 83.45s, right? So as price action starts to retrace into this area, look for buying signals and the potential opportunity to buy this thing up on the next extension higher. Next, we're going to head over to copper. You guys know I'm a pattern guy, so I like this, right? Patterns come in consolidation. Patterns come very frequently, right? We had a discussion with a trader on our platform who was complaining a little bit about the frequency of patterns and how he doesn't notice a lot of them. And then, lo and behold, he trained his eyes to see them, and now he's seeing them every day, right? So there is a pretty good frequency with patterns. Here's one that can go either way. There's actually 3 of them. We're only going to focus on, I guess we're going to focus on all 3. Why not? Here on copper on the 4-hour chart. The first is going to be a potential bullish bat pattern. So earlier we looked at a bearish bat pattern. This is going to be a bullish one. This is going to be our swing low to swing high, X to A. Our first retracement, A to B. This retracement right here, B to C. And then a move down to our 886. Once again, is going to be our CD completion where you would look to buy. We also have a smaller one kind of within here. I think this may be a Gartley. Let me get my fibs on. Fibonacci extension, or excuse me, retracement swing high to swing low. Nope. So this is going to be a bat as well. I don't know why I deleted that. Should have left it on. A smaller one as well inside of here, looking at X to A to B, B to C. And again, if we go up to this 886, that's going to be our CD completion. Right? This one was going to be a bullish. This one would be bearish. And then lastly, if we take a look at bigger picture, I don't personally trade this pattern, but it is one of my favorites to trade. This is going to be a potential butterfly completion. And this may be one that actually I would favor. But this is going to be our X to A to B right here, our B to C, or if this thing extends down, that would still be a valid C leg because it's within the A leg. And then if we extend up to wherever that 127 is I drew right here, this will be the completion of our butterfly. The question for me at least is, does this come at a level of structure? That way I can put in a smart protective stop and boom, lo and behold, you do have a nice little structure high here as well. So if you are a butterfly trader, the cool thing about this, right, typically our stops are a little bit blind for butterflies, blind as far as structure goes, just because the pattern completes above the X leg, unlike the other ones that complete within it. This one, you have a nice level of structure to put a stop above where you can still be comfortable and feeling safe, again, if you're someone that values structure. Lastly, we're going to head over to the Nikkei. We've seen a lot of indexes really explode to end the week. And I want to pick this one out because we're exploding right to a previous level of structure. So this is going to be pretty simple. We're just looking for shorts at structure here on the Nikkei. This is the daily chart. But you can see our previous level of structure consolidation, right? We're right in this level. We've expanded up. Right, we would expect some relief here in the market, right? Expansion leads to relief before the market decides what it wants to do. The cool thing about this is we have a pretty nice target level on our way down. Again, we could look at our previous level of consolidation right here. Not only did price action find resistance here a few times, but we even had a nice little pregnant pause here. So if we can continue up a little bit more, hit these highs, there's an awesome opportunity for a counter trend or a structure-based counter trend short back down into our previous level of resistance, which now should act as support. Hope you guys enjoyed today's video. Remember, check out the Trading Coach podcast, new episodes 3 days a week on your favorite podcasting app. Also, I've been uploading videos here on a daily basis to YouTube, so make sure you subscribe. That way you don't miss the latest video. Most of them come from analysis and discussions that we've had in our live trading room. And by the way, if you want to join the live trading room, you can do so as well. Just head over to www.tier1trading.com. We host it Tuesday through Thursday, both a London and a New York session. Come in, ask questions, join the analysis, share ideas, and just spend some time around like-minded individuals. We know that good, real traders are pretty rare out there. So www.tier1trading.com, head over to the platform, sign up. I'll see you guys Monday in the Q&A if you're a premium member. Live room members, I'll see you Tuesday.